All right, time to take a look at gold again. I was pretty sure this was going to happen after seeing the recent attacks, here, here, and then, we got the attack to prevent gold from getting back above the 50-day moving average, and this is also where the 200-day moving average was. I've been warning people that the bullion banks they have a big short position they're stuck in, and they're trying to get out of that short position. And it's been pretty clear that they have been attacking gold repeatedly to prevent this intermediate cycle from rallying like it probably would have if minus the manipulation. But anyway, today or this evening, gold has officially broken below the November ICL. So what this means is that this intermediate cycle has left translated and now it has failed. And by failed, I mean prices moved below the prior intermediate cycle low. So let me widen this chart back out a little bit here. So probably, well, it's still pretty early. I think we're only 10 weeks. Let me count this and make sure. Actually, we're 11 weeks. So we're 11 weeks into this intermediate cycle. So here's what happens when we get these left translated intermediate cycles, or even when we start the declining phase of an intermediate cycle, is gold bugs, which tend to be really emotional investors. They're constantly trying to pick a bottom. So every bounce looks like it's the bottom, and then they immediately start squawking about missing the move. The train is leaving the station. And then what happens is once, and this applies to any asset that's in the declining phase of its intermediate cycle, but once the price gets short-term overbought, then it rolls over and it goes down and makes another lower low. So this is what's going to happen. We're probably going to get a bounce here pretty quick. Now we got options expiration tomorrow. The banking cartel is going to try and pin, and they're probably going to try and pin GDX at 32 or lower. They're probably going to try and pin GLD at 165 or lower. So, I doubt that this is going to bounce immediately. It may be Monday or Tuesday before we bounce, but we're setting up for a bounce here, and it'll look convincing, just like this one did, and just like this one did, and all of these in real time they look convincing. They look like the bottom, and this is where I think cycles are helpful. We know the average duration of an intermediate cycle tends to be 18 weeks on the short side. Normal is usually between 22 and 25, and every once in a while you'll get one that'll stretch a lot longer than 25. So I kind of expect that this one to be either a normal duration or maybe just a little bit short. And the reason I say that is that this intermediate cycle here was really long. I think this was 37 weeks. However, this cycle to here was a bit short. So usually a long cycle is either preceded or followed by a short cycle, and this cycle was a little bit short. So that may be what, this long cycle may be balancing out this short cycle down into this bottom. So that's kind of why I think this is going to turn out to be a normal duration intermediate cycle. So we're on week 11. I'm going to say we probably aren't going to get a more sustainable bottom until we get to week 20 or later. So we've probably got 9 more weeks at least. So what I anticipate, I don't think we're going to have a lot of damage done during this intermediate cycle, even though it has left translated and failed. I think it's just going to be very erratic and very whipsawing. And I'm not really even expecting we may only go to about 1700, but it may take 2 months to get there. So like I said, I think we're probably setting up for a bounce maybe Monday or Tuesday. That'll probably look pretty convincing. We'll probably come up, but probably won't be able to make a higher high. We'll come up a little bit short. So you can see that that's what's been happening since here. So this you could tell this is the advancing phase of an intermediate cycle because we're making higher highs and higher lows. So we're stair stepping up. Now we're doing the opposite. We're stair stepping down. So we're in the declining phase of the intermediate cycle. And I want to warn people not to get caught on the slope of hope. And every time we get a bounce, and anticipating that is the bottom, I really doubt we're going to get a final bottom until we probably got, like I said, we probably got another 10 or so weeks before we get that final bottom. And there are a couple of things I'm going to be looking for to tell me, when we've got the final bottom. One of them is we usually get a bloodbath phase. We kind of had a bit of a mild one here when we broke that 1850. It kind of unleashed this selling panic. We'll probably get another one of those at some point in the later down the line here. Maybe we bounce here and then we spend 5 or 6 weeks, bouncing around like this, whatever this is. Let's just call it 1760, 1750-ish. This level right here. This might be a support zone that kind of acts as to stop these declines, and we just get multiple bounces off of this support zone, and none of them follow through to the upside until people really just get so frustrated they give up on the metals altogether, and then at the very tail end, we finally break through that support zone, and we get that 5 to 7 day bloodbath phase that maybe takes us down to 1700, and that's where we get our final bottom. So I mean, that's just one scenario that I could see playing out, but I don't think we're going to get this big. I don't think you have to worry about a big nasty move down that's going to take gold back down to 1550. That was kind of a major support level. And I guess that is possible, but I doubt it. In a free market that wasn't being manipulated, there's no way we're ever even going to go back below 1800. Way too big of a support zone. But I've been warning people for months now that the bullion banks are caught in this big short position, and they're manipulating the market. They're breaking these rallies, and they want to get gold down so they can cover those shorts and then get long. And so that's probably what we've got in store. We've probably got a bunch of erratic bounces. Maybe they all bounce off this 1760, 1750-ish level until finally breaking it. Then we get our bloodbath. Maybe we just slowly stair step down over time, and it gradually, we just get these marginal undercuts of previous pivots until we finally get our final intermediate and yearly cycle low, maybe sometime in probably out in April, maybe early May. And it again, I really doubt that we're going to go much below 1700. So I don't think there's a lot of downside, but I think there's a lot of frustration ahead. So just a warning, don't get caught on the slope of hope. We've probably still got another 9 to 10 weeks to go. I think we're going to get a lot of very convincing bounces. Don't be fooled. They will, almost all of them, I'm sure they were all once they get short-term overbought, they're going to roll over and go down and make another marginally lower low, or they're going to continue to bounce off this support level one way or another. But I really don't think we're going to get a sustainable bottom until we get out into April or early May. So I know it's frustrating, but I think we're going to have to just have a lot more patience in the metals a while longer. And then if we take a big picture look, I mean, this looks like a pretty well-defined cup, and we're making the handle here, and it's just, This cup took almost 10 years to form, so it's probably asking too much for this to be over in 6 or 8 months. We're probably got more months to go before this handle is complete, and then we break out to the upside. And again, I think the bullion banks are going to do everything they can to make this handle pattern last as long as possible and go as deep as possible so that they can try and get out of those massive short positions that they have gotten caught in.